How's it going? It's Rocky. Welcome to week 8 of the $2,000 weekly challenge. Every Friday, we review our weekly account statement from trading the micro E-mini and the E-mini futures. We also try to review some of our trades to show some of the good trades that I've made during the week and some that we shouldn't do and definitely learn from. And trust me, this week we're going to be showing some trades that you should definitely not do and learn from. Our goal with this challenge is to earn an income of $2,000 every week through a common strategy utilizing the MACD and the stochastic RSI. By using a time-based chart, as what I have on the left here, and a tick-based chart, which is what I have on the right. The details on the strategy are listed in the description below and are also mentioned through examples in most of the content we've released so far. I have a link above for a playlist of some of those content. Just keep in mind that my trading is not the right or wrong way of doing things. It's a strategy that I've become accustomed to and backtested and try to improve over time. As a trader, you yourself should develop your own system and be comfortable with what you're using. I have no chat room and I'm not selling a course. I'm just enjoying sharing my content with everyone and learning from the community. So if you have any suggestions, please let me know on the comment section below. Essentially, trading the micro futures is based off of the index, the 4 major index for the US. We have the S&P 500, the Dow Jones Industrial Average, the NASDAQ, and the Russell 2000. With the past 2 months, I've been consistent in trading the Dow Jones itself, which consists of 30 blue chip companies. Essentially, if you've been following the market, the past 2 days, this week has been quite difficult. The market is down a lot, almost 1,000 points for the Dow Jones. And you can see, the major companies that are part of this index are red today. Anyway, now let's go through our account statement. Unfortunately, we did not reach $2,000. We actually almost blew up our account this week, which is really unfortunate. But let's just go through what we did. But before we get started, we did withdraw the usual, money. I withdrew $2,000 for the week, so we will be adding that for our ending cash. Unfortunately, we ended the week at $9,596.60. So if you look here at the end of Thursday, we traded both the E-mini and the micro. And basically at 1:15 is when the mark-to-market occurs. It shows 2 o'clock here, but really it's at the price at 1:15 p.m. Pacific time. So essentially at this price, this is how much our loss were. So whatever unrealized loss you have, it becomes realized. So that's what mark-to-market is. And we decided to hold on again today, Friday, and as you can see, it again had a mark-to-market at an even lower price. So we are long on this position at 39.12, and that's how we now have an unrealized loss that became realized, and that's what brought us such a big loss for the week. But essentially for the week, we are down $5,243.98. The first 3 days was actually quite strong. By Wednesday, we were at $1,558.96. But unfortunately, due to some trades that I made, that was, yes, emotional trades, and that's what caused us to be down so much that we're getting really close to actually blowing up our account. And what's tough is we actually got a margin call on Friday, and I did not satisfy that margin call. So what that means is on Monday, I will have a 2-day margin call. So at that time, my account will be frozen. I can't do anything but sell. So I have 2 choices. I would have to deposit cash to meet the margin call, or I would need to close some of my contracts. So that'll be a decision I'll make on Sunday. Fortunately, I understand this a lot better because in the past I've panicked. I ended up losing a lot of money because of it, because I didn't quite understand how mark-to-market and how the margin call works. But this time I have a bit more composure to deal with it. And we're hoping that for the week, we can actually recover a lot of this, or at least maybe hold on to our E-mini, which we have one contract of, and maybe just get rid of our micro futures, for which we have 6 contracts of. Anyway, let's go through the trade that ruined it for us. So what we're seeing here is the E-mini futures. What that means is for every tick, it's equates to $5. So as you can see here, our PL open for this one contract is at $4,515, which is a lot of money. And this is where the emotional trading happened here. So what was really tough is on Wednesday, the Dow Jones started the day red and at around 31,360 here, and it shot up all the way to 31,900, which I thought was that was way too much. As you can see, actually, during the day I was counter trend trading, which something it's a bit dangerous to do, but I ended up doing that. I made 3 trades and those were all successful, which was good. What was rough about it is at around 5 p.m. I decided to short it because we were at 32,000, which was ridiculous. So I shorted at 31,971, and I thought the market just went way up way too quickly, and I didn't like that move. So fundamentally, that's why I shorted it. However, I did close the trade at about 12:30 because I didn't want to leave any trades open overnight. So from 971, I closed it at 952. And I guess you could say a bit of a FOMO occurred because when I woke up in the morning from closing at 31,952, the market actually opened and got down to about 31,709. So had a bit of FOMO there because it's about 200 to 300 points. So 200 to 300 points times 5, that would have been close to $1,500 we could have made if I kept the short. But I was following my rules of not leaving overnight, and because of that, I think I was just a bit frustrated. So I did a bit of a FOMO trade here. Again, another counter trend trade, and I saw it going up. As you can see in the MACD, I was still following my rules here. And that's the reason why I went long. But as I've always said, when this crosses over, you normally want to do a bullish position if you are above the 0 line, because if you're below the 0 line, like we have here, the probability of it working is worse. And also, if we look at the stochastic, if you look to the right here on the tick chart for that corresponding trade that was made there, so long position at 31,818, it wasn't matching. So the stochastic RSI was, I guess you could say it was also on its way back up. However, the divergence is not quite there. The crossover already occurred here, and usually I don't like to do it towards the tail end of it. But again, it became a FOMO trade. So our average is 31,818. So back to the time chart on the left, we had an opportunity to exit the first 15 minutes of holding it. It went up to about 833. So with my target, if I kept my OCO, I should have adjusted that, which I did not because I was being emotional about it, and because of that, it just kept dropping and dropping. It never really reached that average. Something we could have done, but then this is hindsight trading, that's normally not the way to trade because you're smarter, because it's hindsight. I could have exited here and taken a loss at 31,630, but I let my losses run. Close the day there, close to 31,288 or so, 31,200 actually. I let that run some more for today, and I got down all the way to 3806, and the mark to market today was 30,915. So that's why we're down $4,515 on the E-mini. But what made it worse is on the micro, which I'm going to switch the chart right now. On the micro futures, since I was frustrated with my trade and I made a bad entry, The second bad thing that I did here was that I opened another 4 micro contracts at 31,744, and then I just did that purely because I guess, I don't know, there was emotions, because if you look at the MACD crossed down, was on its way down. I shouldn't have entered that at all, and then I added another 2 contracts, which made it even worse. So for these 6 right here, we are down $2,418. So that's quite a tough week, but like what I said, I understand the margin call very well, and will react accordingly on Sunday. So one thing that I might do is I might just take this loss here on the micro, which is 2,418, and since we are long, I'm able to hold on to the E-mini a lot longer until it recovers. But here's the tricky part with the futures. It's a quarterly contract, and we have a March contract here. What that means is essentially it switches over normally on March 15th, but just to be safe, I'm only gonna hold on to this for maybe a week, because it gets really tricky when it changes the contracts from the March 2021 to June 2021. But anyway, that's just the unfortunate week that we had today. We're close to blowing up our account, but I'm hoping for some sort of recovery next week. If not, well, then that ends the content that I'm doing here on YouTube until we get some more cash to continue doing this. But hopefully you do learn from my mistakes, and good luck to you out there in trading. I'll see you in the next one.